Canada's inflation number just dropped, and the headline is going to trick you. Inflation is fine at 2.5%, but the vibes are about to get a lot worse because groceries just popped to their fastest pace since the end of 2023. Here's the story in one sentence. Services inflation is cooling, travel, accommodation, and even rent growth is slowing. But goods inflation, what really matters and what the consumers feel, especially heading into Christmas, is reheating, led by food. And that is exactly how you get a population that feels like inflation has never ended, even though we're seeing inflation come down and settle into a level that would be considered acceptable and normal by Statistics Canada and the central bank. And this is why people feel, as they describe, gaslit by these numbers, or they don't believe it, or they don't agree with it. So the five numbers that you need from CPI release from Statistics Canada today. Number one, headline CPI, 2.2%, basically unchanged. CPI excluding gasoline, 2.6% year over year, and it's been there for 3 straight months. Services at 2.8% year over year, down from 3.2%. Rent inflation is still up 4.7% year over year, but slower than October, which was at 5.2%. And most people would say that they're seeing the rental market and rental rates are falling. And so this rental inflation that we're seeing is probably not going to last forever. And I think the Bank of Canada knows that. And so chart 3 on Statistics Canada website says rent prices increase at a slower pace year over year, but still remain elevated. Let's talk about the big one here. Groceries are up 4.7% year over year and up 1.9% month over month, the biggest monthly jump since January 2023. Quick little trip down memory lane. Inflation was 5.9% in January of 2023. Now, let's get into the details that matter here. Travel tours are down 8.2% year over year and down 12% on the month. StatCan literally points to lower demand for US destinations, putting downward pressure on the travel index. Whether or not that is a political statement from Canadians or the fact that Canadians don't have a ton of money and don't have a ton of buying power against the USD, who knows? Traveler accommodation is down almost 7% year over year, and Ontario is a massive driver at 20% drop, partly a base effect from the big Toronto concerts last year like Taylor Swift, but you would assume that the Jays World Series might be able to offset that.